Greetings, members, one and all of the Salivation Nation. The key to gold and silver's long-term bull market is inside of this video with what I'm about to share with you. So let's explore. Yes, indeed. Well, the key's not actually in here. It's actually out there in a mine someplace, because that's what we're talking about here. And this is the key to long-term bull market. You know, what is it about gold and silver's prices that kind of drives us crazy? What drives them? Supply and demand. How do you get the supply out there? Well, you got to mine the stuff. Gold and silver. Mining of those metals has been happening for years. I'm going to be referencing an article here from Kitco News that talks about this, and this is based off of a new report that has some shocking revelations in it that I think will astound you. The gold market is testing resistance at $1,800 an ounce, and it's trading at a fresh 4-week high as I record this video. In fact, actually, it's down a little bit today, but it's still, heading in the right direction, according to some here. Gold prices, have been pushing back higher on the back of falling bond yields and growing recession fears. In fact, technically we are in one, as we have had 2 quarters of negative growth. But one market analyst said that investors should also pay attention to the supply side of the market. It's a very important thing for sure. In a report published on Tuesday, Eric Norland, executive director and senior economist at CME Group, said that falling mine supply in gold and silver should provide long-term support for prices as demand remains robust. Now, I will caveat that, because one of the reasons why we've seen silver so low is because of supply chain issues, and likely recession is going to put pressure on silver as well too. It's not going to be in as much demand, but there is some conflicting reports about that as well with regards to silver. But silver's price has suffered. I'm going to talk about that here later. If you enjoy news like this and analysis with precious metals, I hope you will consider pressing the thumbs up on this video and sharing and liking this video. But nonetheless, let's move forward here. He noted that between 2016 and 2021, mining production in gold fell 7%. At the same time, the silver mine supply has dropped 8.5%. And one thing about silver is it's a metal that is mostly mined as a byproduct of other metals. And that could make the shocking revelation I'm going to share with you later on maybe not so surprising, but we'll get there in a moment. A reduction in new supplies may be part of the reason why precious metal prices rose over the last 5 years, he said in the report. And that very well could be. Some of it also could just be the overall economic situation we have, and we have a whole lot more new accumulators of physical precious metals, which I think is definitely a very good thing. Although investment demand can drive price volatility in the short term, Norland said it isn't enough to supply long-term bull markets. So there is that. That's his response to that, and I think there's some truth to that. In fact, that's one reason why I think we've seen the price kind of fall back a little bit, even with increased physical demand. Look at the silver squeeze movement. It had a brief moment of effectiveness, but overall, it was not enough to really move the needle a whole lot as we march through that time period. Movements in gold and silver prices are more often attributed exclusively to demand-side factors, he said. Our analysis suggests, however, that demand-side and supply-side factors combined to produce the decades-long bull and bear market, and that neither side of the supply equation was solely responsible for gold and silver's price movements. Norland said that his research also shows that gold and silver are sensitive to each other's production levels. And that's an interesting bit of research and analysis there. Silver prices have underperformed when gold production has risen. Think about that for a moment. Silver prices have underperformed when gold production has risen. Now, silver is mined also as a byproduct of gold, as well as zinc, lead, nickel. But that is an interesting thing. Here's a little bit of a shocker, but not so much. The vice versa is true too. Gold prices have underperformed when silver production has risen. That is interesting. Now keep in mind that silver, being mined as a byproduct of other metals, mostly base metals, although again, as I said before, silver can be mined as a byproduct of gold, but nonetheless, when silver is mined as a byproduct of those base metals, that means the economy is doing good, and silver prices may actually rise during that period because of increased demand for it as an industrial metals. Silver's prices can rise as an industrial metal. Gold prices typically rise because of fear of economic hardship. Gold is mostly treasured. Silver is mostly consumed. So that is kind of where we are at here. And this is why the volatility of these metals and things are kind of out of whack now because of what's been happening with the economy. And that's really not bode well for silver during this time. Looking ahead, Norland said that gold and silver production presents a mixed picture. Now here is the kicker. This has really blew me away when I read this. He noted that both gold and silver miners are seeing massive revenues as prices are well above production cost. Now, that's not terribly surprising for gold, but given with inflation and the like that's happening, and it's getting more difficult to mine an ounce of gold, it does surprise me somewhat. But for silver, that was mind-blowing in my view. He also stated that production continues to fall and miners are struggling to replace the ounces in the ground, but they're not struggling in terms of profits. And this is why I think part of the reason why we're seeing this push for some of these junior miners, and you've seen on my channel and others, you're not going to see it in this video, but you've seen us cover some of these miners, and they're looking to get, there is some opportunity here because they're doing very well, massive revenues. That's pretty amazing, surprising. I've seen time and time again as silver price has moved below $20 an ounce, people saying, well, hey, with inflation, fuel costs and like, they got to be getting close they've got to be getting very close to production costs just in the spot price there. But I've countered those arguments. I'm going to talk about a little bit reason why they can still profit, but I didn't realize it was this much massive revenues. Norland said that gold producers are on average seeing profit margins north of 60%. That is amazing. I had no idea. And operating margins well above 125%. Silver producers are seeing profit margins of around 75%. 75%. Even as silver prices underperform gold. Now think about that for a moment. Some of that can be explained, but it still is mind-blowing. Gold to silver ratio as I record this video is above 88 to 1. So why is this happening? I can partially explain it. Number one is that there's less and less primary silver miners out there. Let that sink in, folks. There's less and less primary silver mining going on out there. That is dwindling down dramatically. Silver bugs see that as a sign that, hey, that means there's less silver out there, silver shortage and the like. But you couldn't be further from the truth, because the vast majority of the silver that is mined, probably including what made up this silver eagle that's in this very video, even though I believe the silver was mined in the United States, the vast majority is mined as a byproduct of other metals, which means that the vast majority of the concentrated costs are to get those other metals out of the ground. It's like a bonus. It's like a benefit. So they got silver, they can get out much cheaper because it's not their primary focus. So the estimates, and this article doesn't talk about it, but the last estimates I saw, and it's going to be a wide range because each mine is different and each process is different and each company is different that operates those mines. The cost is anywhere between $4 and $9 or $10 an ounce, as opposed to the primary silver miners, which back during the time was around between $15 and $18 and $19 an ounce. And so with the primary silver miners, and given where fuel cost, I don't know if those numbers have changed a whole lot, but that's the range. It is a wide range, but still, that is kind of where it is for silver. Now, gold is obviously much lower. In fact, you've heard me talk about when I've done some of these profiles that it's about $800 an ounce to mine an ounce of gold. That's the approximate for some mines. So very interesting indeed. So that is some of the reasons why. He goes on to quote here, high current profit margins do not necessarily imply that we will see strong growth in the sector in the near future. Finally, even amid increased investment, there may not be a strong rebound in silver and gold production for many years, given the time required to begin extracting ore from new mines. That's why a lot of these exploration companies are out there, because they're looking at the future. It does take a while. They got to do drill. They got to get the results. They got to get investors. They've got to get. There's a lot of stuff that's got to happen to make this occur. And this is why you're learning a lot in that sector. Thus, while there is little reason to anticipate cutbacks in the world's mines, there is equally little reason to believe that today's high prices will quickly translate into increased production of either metal. And what does that mean? That means we're likely to see higher prices. That is the key to a bull market, a long-term bull market. So I'm of the mind that probably we are near the end of these low prices or lower prices for silver, and by some extension gold, because gold has gone down, since 2020. I think we'll probably likely see gold trade north of $1,800 into the $1,900 range, and who knows, we could very well revisit that $2,000 level again, although it may take until next year. We really don't know, but very interesting indeed. We'll find out what happens. By the way, during the course of this video, I have declined 4 scammer calls. That's right. That's the sacrifice to take for you people. So hope you enjoyed this video. If you did, please press that thumbs up button. Please share this video. And please click on one of these couple of videos at the end screen. Very important stuff there. So I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.